Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
What the world needs now is people who see energy a little bit differently. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
The Supreme Court on Thursday ruled that GST on ocean freight paid in case of import of goods is unconstitutional. And while upholding the Gujarat High Court order on sea freight, the Apex Court also said that recommendations of the GST Council are not binding, and both the states and the centre have the power to legislate on GST matters. So what does this mean for the GST framework, and how will it affect the centre's relationship with states, especially those being ruled by opposition parties? Let's find out.
In a ruling that will have major implications on the GST framework and centre-state financial relations, the Supreme Court of India on Thursday said the recommendations of the Council are not binding on the centre and state governments. The observation followed a judgment over the applicability of GST under the reverse charge mechanism on transportation of imported goods through the sea route. The Apex Court dismissed an appeal by the centre against an earlier Gujarat High Court judgment that said that integrated GST on ocean freight is unconstitutional. The Supreme Court held that GST Council's recommendations will only have a persuasive value, adding that the Parliament and state legislatures possess equal powers to legislate on GST. Abhishek A. Rastogi, a partner at Khaitan & Co., who argued on behalf of the importers, said there will be a pragmatic approach to the provisions which are subject to judicial review by way of challenge to the constitutionality of such provisions based on GST Council's recommendations. The decisions in the GST Council are taken by a majority of not less than 3/4 of the weighted votes cast. The centre has 1/3 weightage of the total votes cast, and all the states taken together have 2/3 of the weightage. In the last 5 years of GST, the Council has taken all decisions on the basis of consensus, with the exception of the levy on lotteries, in which voting took place in December 2019.
We challenge the constitutional validity of the levy per se on various grounds. The revenue argued that these changes in law were incorporated basis the recommendation of the GST Council. The answer is like this.
Yes.
The recommendation has a persuasive value. You must implement that recommendation, but you must not do something basis the recommendation which is unconstitutional. The GST Council will keep giving the recommendation. The process of voting, the weightage of the federal government and the state government all remains intact. But what the court order says, or those provisions which are based on the GST Council recommendation, but those must be taken only as recommendation. They will still have to cross the constitutional barrier or will have to test the constitutionality. But for instance, if there are certain policy decisions, the GST Council must keep into mind the cooperative federalism, must keep into mind the harmonized system which it needs to follow. But now today, if the two states decide to have two different rates, that will completely defeat the objectives of GST. Court very clearly says that one, GST Council has only recommendatory role. The recommendations will have a high persuasive value. But that does not mean that tomorrow the states deviate. The state will have to debate if they want to deviate against the general principles.
The Finance Minister of Tamil Nadu, Palanivel Thiagarajan, welcomed the court's observation, saying it clarifies issues that he had raised last year. He had said the GST system and the Council function with an all-encompassing mandate not envisioned in the Constitution of India. He said the vesting of enormous de facto power in bodies not directly connected with the GST Council, such as the Tax Research Unit of the Central Board of Indirect Taxes and Customs, the GST Secretariat, and the GST Network, is fraught with questions of constitutional legitimacy. What would the Supreme Court's remark mean for centre-state relations going forward?
This will lead to a lot of interpretational issues in relation to whether the states have their own respective powers to go ahead and legislate separately or not, or how the cooperative federalism will, now going forward will be followed in this country. My view is that there will be a lot of, I would say, a lot of litigation on various aspects, and which will ensue. The concern which has been raised by them is that most of the powers related to levy of the taxes is now vested with center. Though they all are part of that collective decision-taking process as part of the council, but what they still feel is that we have to go by what is the agenda which is set primarily by the center. The council kind of does not leave the states with any independent powers to look at their specific needs. And that's where they are kind of welcoming this particular observation. The decision of the Supreme Court will definitely give more teeth to the respective independent states to raise their concerns and say that, okay, even if the council is not agreeing, I may have my own authority powers to look at that particular issue from my state's perspective. But that's is the worrisome part. Whether that will happen or not, if that starts happening, then the whole concept of one nation, one tax, and one process, the whole structure of the GST may fall apart. That's the concern that we all have. But yes, I think center will also have to now be more accommodative.
Another legal expert says that yesterday's ruling does not change the way in which the GST Council functions.
It definitely gives more ammunition to the states to negotiate and put forth their points. But that would also not mean that, so the majority view will not be overruled by a minority view. So that is definitely not the case. But yes, as far as the states are concerned, this does give them a bit more leverage. The law has always been the same. There is no change as such in the constitution or the provisions pertaining to GST Council. The Constitution itself in Article 279A provides a mechanism where the GST Council itself can decide and deliberate on any kind of difference of opinion between states and the center, or between two or more states. So the GST Council itself has the power. So in any case in future, if there is ever a difference of opinion between the states and the center, the GST Council itself is empowered under the Constitution to decide on those differences.
Meanwhile, Revenue Secretary Tarun Bajaj said the ruling is unlikely to materially impact the one nation, one tax regime, as it is only a reiteration of the existing law that gives states the right to accept or reject the Council's recommendations, a power that no one has exercised in the last 5 years. The official further said that states never went back and framed legislations that were not in line with the panel's recommendations, even when they differed on tax rates on a particular good or service in the Council. To sum up, the SC ruling affirms that GST Council is merely a recommendatory body and its suggestions must pass the test of constitutionality. The states have also gained some bargaining power and can put forward their concerns before the GST Council more strongly.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the corridors of Supreme Court, let us see what all is happening in the alleyways of Gujarat, Surat, where over 90% of the world's diamonds are given the right shape and the sparkle. They have become quieter since Russia started bombing Ukraine. The supply of rough stones has almost come to a halt after US sanctions of Alrosa, the biggest diamond miner in Russia. It has left diamond cutting and polishing units high and dry. Our next report tells more about the brewing crisis in Surat's diamond industry.
Situated on the banks of Tapti, which follows an east to west itinerary, Surat has been a bustling industrial city for ages. It is a hub for fabric production. And it is also the city which gives shape to over 90% of the world's diamonds. Inside the row upon row of rundown factories, rows of workers sit for hours at a stretch to slice and polish tiny stones until they take the perfect shape with 58 facets. The journey of the diamonds, which begins from mines in Russia and Australia, ends in these congested lanes of Gujarat's Surat, from where they are sent for sale on the high streets of Europe, the US, and other parts of the world. Surat is home to over 1 million workers who come from UP, Bihar, and several other states to eke out a living by polishing diamonds. But the streets of Surat are not as bustling as they once used to be, and workers are not getting the amount of work which they used to get over 2 years ago, when the pandemic struck. The second wave of the pandemic led to an exodus of workers and a subsequent dip in production. Even as things were returning to normalcy, an altogether different challenge has emerged for the industry. The crisis originated in faraway Ukraine, when Russian President Vladimir Putin decided to send in his military into that country, and in turn got Moscow placed under far-reaching sanctions by the US and its allies. Partly owned by the Russian government, the world's largest diamond mining company, Alrosa, also came under sanctions. It accounts for 40% of the world's rough diamonds supply in volume and 30% in value. And Surat's diamond industry is also heavily dependent on Alrosa's rough diamonds. Sanctions have now forced diamond polishers and exporters to cut production due to the lack of raw materials. And at the same time, over 25% of the Surat diamond industry's workers are on annual summer leave. The industry, for its part, will see significant job losses in June if it doesn't receive the Russian rough diamond imports. At present, even as production has been hit by the lack of rough diamonds, the industry has sent over 250,000 workers on 15 days leave till June. Quoting one of the leading Surat-based diamantaires, a Business Standard report explains what could happen going forward. The real impact of sanctions on Alrosa will be seen in June, which is when production will resume after the summer vacation. That's when the real problem could occur if the shortage of rough diamonds continues. Add to this the fact that there is hardly any inventory in the industry. The Gems and Jewellery Export Promotion Council has been calling for an intervention by the central government, especially the Ministry of Commerce. However, the council's vice chairman, Vipul Shah, has said that until that happens, the industry might be staring at huge job losses in June and July. There's no telling when the war in Ukraine will end. In any case, the sanctions on Russia could outlast the war itself. Thus, if no steps are taken now, the shortage of Russian rough diamonds is likely to continue in the coming months. Amid all of this, there is one possible solution that the government could offer, even though it has its challenges.
So, the sanctions on Alrosa is by US. So in that ways, the only thing is that particularly countrywide, there is a sanction on Alrosa. What we seek, I mean, of course, the sanctions and the situation is going to continue for some more time that we can judge. So what we can see is that if there is a payment option to Russia from India, if that is the way created from Indian government side, probably then the industry could have been in a better position in coming times. That's what we feel. Yeah, it will help. That way is not open yet to diamond industry. It's open to other more essential products. But if that route is available, then there's only way that rough can come into India and people here get a job.
There's also one option that the industry can explore on its own.
So as I mentioned, lab-grown diamonds, I mean, the processing of rough to polish of natural and rough diamond, lab-grown diamonds are almost the same. So the tools required, the skill set required, and the people required will almost be the same. What we have seen in the past is already in last 2 years, because of COVID, who had problems with, financial issues with natural diamonds being in the industry, they have easily switched to lab-grown diamonds, and they have been like fairly doing well today. So similar situations we can see in the current situation as well, where those people who are heavily dependent on Russian goods only in their factories, probably they couldn't have more rough from Russia. They can switch to lab-grown diamonds easily with their current setup.
However, lab grown diamonds might not prove to be an immediate alternative if US sanctions on Alrosa continue. As the Business Standard report highlighted, it takes 6 to 8 months to set up a laboratory to grow diamonds, and the actual production begins after almost a year. Known for polishing 9 out of 10 diamonds in the world, Surat houses roughly 6,000 diamond polishing units that employ nearly 1 million workers and clock up an annual turnover of $21 to $24 billion, or 1.6 to 1.7 trillion rupees. A disruption in supply chain will not just hit the revenue but also leave thousands of workers unemployed. This industry's good health is of great importance.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The mood on Dalal Street was also as somber as in Surat. A sharp sell-off hit domestic equity markets yesterday as concerns over high inflation coupled with heavy foreign outflows butchered bulls. Going forward, analysts believe that the markets will continue to remain on the edge over fears of recession in the US and prospects of aggressive monetary tightening by global central banks. Here is an analysis on what dented investors' sentiment and what lies ahead.
Dalal Street witnessed another bloodshed on Thursday as weak earnings by retailers listed on Wall Street rang alarm bells regarding subdued consumer demand. The BSE Sensex crashed 1,416 points to slip below the 53,000 mark, while the Nifty 50 gave up over 300 points to slip below the 15,900 mark. So far in calendar year 2022, frontline indices S&P BSE Sensex and Nifty 50 have bled over 10% each, whereas broader markets have tumbled up to 21%. The selling comes on the back of monetary tightening by global central banks that are walking a tightrope to tame inflation while allowing growth to prosper. Soaring oil prices and earning downgrades are expected to keep market confidence muted in the near term. That said, what has worsened the correction is the relentless selling by foreign portfolio investors for 8 consecutive months. Since October last year, FPIs have sold equities worth nearly 2 trillion rupees, with 4 of the 8 months seeing selling of over 30,000 crore rupees each. And despite retail investors and domestic institutional investors giving muscle to the market, FPIs are having an upper hand. So what's worrying the FPIs and when will this selling abate?
I think there are a couple of things which the FIs are really worried about. One is rising inflation across the world. And the second thing is basically shrinking of the balance sheet of all central banks across the world, whether it is Fed, or it is the European bank or the Japanese central bank. So everywhere basically this liquidity which has been there in the market, I think has created quite a bit of inflation, and that's what they believe it has to be withdrawn. And when you withdraw this liquidity, basically it is going to affect the demand. And that is what I think the US is worried about. Again, on the US side, we really look at it, the 10-year yields have gone up to now 3%, and the dividend yield on S&P 500 is only 1.5%. So it makes a lot of sense actually for the money to move back to the US and go and get invested into the 10-year bonds in the US. We're getting something like a 3% yield, which is very interesting. I think it will take at least a quarter for them to become convinced about this. So we have already started seeing some slowdown in daily selling, which used to be around 4,000 or 5,000 crores, has now come down to 2,500 crores. So that is one part of it. But I think they will wait to see that the inflation is getting controlled or the peak of inflation has happened in the US. So I think they will wait for a couple of months of print before coming to that conclusion.
While Maheshwari believes retail investors have behaved maturely during this breakdown, a break below 15,000 on the Nifty can trigger fresh bout of panic selling. After yesterday's closing, tech charts suggest that the Nifty 50 formed bearish pattern on the daily charts on Thursday, signaling a negative trend. The index now needs to hold 15,671 for a reversal, while it may face stiff resistance at 16,000. On Friday, investors will watch out India's forex reserves data, the UK's retail sales data for April, March quarter results, and other global cues for today's trading session.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the unpredictable Dalal Street, let us now move on to the policy corridors of Delhi. India on Thursday slammed a resolution passed by Pakistan's parliament on delimitation exercise in Jammu and Kashmir. The move has met with some resistance inside Kashmir too. Watch our next report to know more about delimitation and also why it has come under criticism in the valley.
Earlier in May, as it redrew Jammu and Kashmir's electoral map, the government's 3-member Delimitation Commission recommended creation of 6 assembly constituencies in Jammu and 1 in Kashmir. With this, there will be 47 assembly segments in the Kashmir division and 43 in Jammu. So, there are 90 assembly seats in J&K, up from 83 earlier. According to the 2011 census, the population of Jammu and Kashmir is 12.5 million. Of them, 6.89 million live in Kashmir, 5.38 million in Jammu, and 27,400 in Ladakh. The exercise and the proposal have drawn heavy criticism from various political quarters, especially within the Kashmir Valley. BJP's former ally, Mehbooba Mufti, was blunt in her criticism. She said that the commission has ignored the basic parameter of population and added or removed areas as per their wishes. But what exactly is delimitation? Delimitation is the process by which the limits or boundaries of a country's territorial constituencies are rejigged to reflect changes in population. The redrawing of these boundaries is based on the recent census. In India, the number of Lok Sabha seats allocated to different states, along with the total number of seats in a state's legislative assembly, can change as a result of a delimitation exercise. And the body tasked with carrying out the exercise is called Delimitation Commission or Boundary Commission. Such commissions have been constituted 4 times in India. First was in 1952 under the Delimitation Commission Act 1952, then in 1963 under Delimitation Commission Act 1962, in 1973 under Delimitation Act 1972, and in 2002 under Delimitation Act 2002. The delimitation exercise is done for 3 main reasons. First, to ensure a fair division of geographical areas. Second, to ensure equal population representation from every seat. And third, to ensure that the principle of one vote, one value is maintained. Now, let us delve into the controversy in Kashmir over the Delimitation Commission's proposal. The report has 5 major takeaways. First, the 5 parliamentary constituencies have been reorganized so that each now has 18 assembly constituencies. Second, 6 assembly seats in Jammu and 3 in Kashmir have been reserved for scheduled tribes. The third is the formation of the Anantnag-Rajouri parliamentary constituency by merging Kashmir's Anantnag area with Jammu's Rajouri and Poonch. The fourth is the addition of 6 new assembly constituencies in Jammu and 1 in Kashmir. Last and fifth, it has been proposed that the Union Territory's Legislative Assembly should include at least 2 people from the Kashmiri migrant population. So, why the criticism and opposition? As a recent Business Standard editorial explains, the main reason for this is the seat distribution in both the Assembly and Lok Sabha. It appears that the old communal divide between Jammu and Kashmir has been maintained by allocating them 43 and 47 seats respectively. This allocation significantly alters the vote shares in the Assembly. Jammu, with 54% of the population, will get to vote for 48% of the seats. Meanwhile, the Kashmir division, with 56% of the population, will get to vote for 52% of the seats. Under the earlier configuration, Jammu had 44.5% of the seats and Kashmir 55.4%. And when it comes to the realignments of the parliamentary seats, critics see the influence of Kashmiri-speaking Muslim voters being reduced with the restructuring of the Jammu and Anantnag seats. No wonder there have been allegations of gerrymandering.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Last week, the Supreme Court sought the response from the Centre Election Commission and Jammu and Kashmir administration on the petition challenging the constitution of the Delimitation Commission. That's all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.